Hello everyone, I am Soumya, currently pursuing MBA at Sri Venkateswara College of Engineering. I have assignment on accounting cycle. Before going to the accounting cycle, I want to say something about accounting. Accounting is a process of recording financial transaction pertaining of the business, which include the summarizing, analyzing, and reporting these transactions to the oversight agencies, regulator, and tax collection entities. Accounting cycle is a collective process and identifying, analyzing, and recording the accounting events of the company. It's a record of 8 steps of process that begin when the transaction occurs and the end of it include the financial statement of the book. Accounting cycle work. The accounting cycle is a methodological set of rules that can be help ensure the accuracy and conformity of financial statement. Computerized accounting system is the uniform process of accounting cycle have helped to reduce the mathematical errors. And the main purpose of the accounting is to keep track and the financial activities that occur during the specific account of period that can be monthly, quarterly, or annually. In short, the accounting cycle verifies a dollar going to out. The various general ledger account is reported. Accounting cycle. First is identifying the transaction. First, identify the transaction which has happened in the business. Next, journal record journal entries. That transaction record in the journal book. Post it to post journal transaction. Then post that transaction posted to the journal transaction. Calculate unadjusted trial balance. If there any adjustment, calculate the unadjusted trial balance. Analyze worksheet and identify the errors. Fix journal entry errors. If there any journal entry error in your journal entry, fix the journal entry. Create final statement. Close the book. It's closing the book. Identifying the transaction. Identifying the transaction means determining the transaction exists and whether it's not relevant to the business. After the transaction has been identified, then it analyzed and analyzed decision which business accounting will be affected to the how they are affected. Identifying transaction organization begins its accounting cycle with the identification of those transactions, compares the bookkeeping event and could be sale, refund, payment to the vendor and so on. Record transaction in a journal. Journalizing transaction is the process of keeping the word of the all business transaction, tracking them the chronological order, and the generally include the date, accounting you are debited or credited, and brief description in the transactions that occurred. Next comes recording transaction using the journal entries. The entries are based on the receipt on an invoice, recognize the sale of completion of economic event. Posting the transaction process refers to the moving the all transaction to the journal or the accounting book. Posting is a once transaction is recorded as a journal entry it should be posted in an account in the journal ledger. The journal ledger provide a breakdown of all accounting activities by the account. Unadjusted trial balance. Unadjusted trial balance is the listing of general ledger account balance at the end of the reporting period before any adjusting entry are made by the balance created financial statement. The unadjusted trial balance is used to starting a point analyzing the accounting and making the adjust entry. After the company posting journal entries to the individual journal entries, an unadjusted trial balance is prepared. The trial balance ensures the total debit equal to the total credits in the financial record. An accounting worksheet is a tool that is determine the accuracy of the financial statement prepared by the company at the end of the accounting period. It also assists the keeping the of steps involved in accounting sheet. The fifth step is create analyzing a worksheet of debit and credit to the identifying necessary adjustment entries if there any disparity. Accounting journal entries. An accounting journal entries is a financial record. You can track the unrecorded transactions. Some common types of adjusting journal entries are accrued expenses, accrued revenue, provisions, and the deferred revenue. You can use it adjusted journal for accrual account and accounting period transaction. At the end of the period, adjusted entries are made. These result are correction made on the worksheet and the passage of time. For example, an adjusting entry, interest revenue has been earned. Financial statements are the written record of convey financial activities of the company. Upon the posting of adjusting entry, the company prepare an adjusting trial balance followed by the actual formal financial statement. Eighth one is closing the book. Closing the book refers to the process of finalizing the final record for a specific account period such as month, quarter, or year. An entity finalized temporary account, revenue and expenses at the end of the period using the entries. These closing entries include the transfer net income retained earning. Finally, a company prepared a post-closing trial balance to ensure debit and credit match the due cycle can begins now. Most important. The main purpose is accounting cycle is to keep a track of all the financial activity and that occur during the specific accounting period, be monthly or annually. In the chart of accounting cycle, verify that every dollar going into the out of variance journal ledger account is reported. It's important because it can help ensure that the financial transaction that occur throughout an accounting period are accurately and properly reported. This is can provide business with clear understanding of their financial health and ensure compliance with federal regulation. The accounting cycle is an integrated part of company financial department activities. The cycle consists of 8 main steps based on the business transaction tracking. This process helps to see an enterprise main cash flow and draw in conclusion about the financial success or failure. Thank you for watching this video. What are the benefits of accounting cycle? Providing a valuable information for the making an informed decision. The accounting cycle can aid company keeping accurate book, analyzing financial event, preparing required financial statement, overall managing a business successfully.